Revisions to the jobs market data just keep coming out and it keeps looking worse. At every single turn, it seems like the consumer cracks are coming to the surface, and Donald Trump is screaming from the top of his lungs, cut interest rates now, and they couldn't have done it any quicker at this point because the consumer is bleeding out. Now, what will Jerome Powell do? And what does this mean for all of the data going forward as we are seeing some of the most massive revisions we have ever seen? We're going to cover all of that today. But first, let's go over this major jobs market data revision that we saw. Now, of course, I've been covering this on this channel, so make sure you guys are hitting that subscribe button for me. Either way, the first time since 2020 lockdowns, there's more unemployed people than job openings. In July, the U.S. had 7.18 million job openings and 7.2 for unemployed. So the labor market needs those rate cuts. And there it is. The U.S. Department revised nearly 1 million jobs out of 12 months. The largest revision in history. Now, you don't see headlines like this in a healthy economy by any means, folks. So seeing the largest jobs market data revision in history is just what I talk about here all of the time. The data and the data sources that we use to make very important decisions, economic decisions that determine the fate of this country are terrible. I mean, if you're making nearly 1 million job market revisions, I mean, let's just say these things are some of the least accurate things that we've ever seen. And when you're making rate cut decisions, this is where you're getting Donald Trump's nickname for Jerome Powell to be, quote unquote, too slow. Now you can see why, but Powell is just waiting for this data to come through. Now, I'm not justifying his decisions to hold interest rates where they are. But I mean, at a certain point in time, we need to get these job cuts going through, or we need to get these interest rates cuts going through to see the jobs market become a little bit healthier. Now, with that, we are seeing the U.S. Labor Department revise all of these, and it's officially above the 2009 levels, where it was overstated by 76,000 per month. So this is looking literally worse than 2008. And the data itself, seeing the largest consumer-oriented categories in leisure and hospitality, and the total private hiring was overstated by nearly 900,000 jobs. So how can we get more accurate reporting so we're not looking at jobs market data and just seeing it all tumble like this? But now this marks the largest revision that even above those 2009 levels. So look at this. I mean, those big red candles is not something we like to see here, folks. We like to see things in the opposite direction. Now, what does this mean for the economy going forward? Because we have a massive consumer spending economy. And the reality is that if you don't have jobs, you don't have money coming in. Thus, you can't be spending money. It's just plain and simple here, folks. But when you see these amount of revisions, that means that there's been cracks for quite some time, right? So the last month, the U.S. revised 258,000 jobs out of the June and May report. And if you factor in those revisions, June fell by 27,000 for a total of negative 285,000. And it marks the largest 2-month net revision in U.S. history outside of 2020, which literally the entire global economy shut down in 2020. So now if you look at all the data and you exclude healthcare, even if you exclude healthcare, the job loss is 142,000. June 2025 was the first month in 4 years that you saw a net job loss after 2 consecutive monthly downward revisions. Now, in fact, the labor market is entirely dependent on those healthcare job gains. So literally one sector is holding up the entire jobs market. Well, what does that kind of remind you of, folks? Well, it reminds me of the overall stock market where we're seeing the S&P 490 get carried by 10 companies. And we'll get into that more here in a second, but the jobs market essentially being held up by literally one sector is astonishing. But that will likely be revised too, especially for what we're seeing here, right? And so now you take a look at gold, right? It's up more than 40%, and gold miners are up 97%. So, similarly to Bitcoin, we see gold miners really start to continue up for as a levered play on gold. Now, this weakness in the labor market is not new to gold, and it's been priced in for months now as we've seen gold and gold investors essentially front run this news. Now, the Fed's purpose is to reduce that unemployment, yet this dual mandate since 2021, it's been labor and focus on inflation, hasn't really cared about the jobs data. So, as we're seeing more of these lockdowns come in, well, this historic market concentration is just insane. The combined weight of the S&P 500 stocks with 3% or more of the share of the index has reached a record of 32%. This is tripled over the last 8 years. Isn't that insane? So in the dot-com bubble, it was less than 10%. So the market has never been more concentrated than where we are right now. So we're seeing essentially 7 companies hold up the entire stock market and the consumer losing jobs left and right. And we're told that the market is healthy, even though we have the Fed and the president essentially fighting over rate cuts. Now, watch what they do, not what they say, folks, because we're seeing just massive amounts of these job revisions come on down. And it's signaling that the economy is shakier footing than realized. I mean, if you look, there's allegedly 7.4 trillion sitting in money market funds because everybody is worried to put money in the market for this impending crash here. So when we look at what we've got, the US economy is way worse than we thought. But I mean, if you look at the yield curve, it's not looking healthy. Right? I mean, the yield curve is showing all of this. These 1.2 million jobs fewer are just a sign of what these investors have been essentially signaling to the market for quite some time. Right? Gold investors, all these investors kind of like looking at the economy, all this data, they all look for signs like this. And they've been signaling to the market, hey, you know what? It's not exactly as strong as we may think. They've been saying that for quite some time. So when we're looking at things like this, you got to keep a close eye on what we've got going on. So we have essentially a very weak jobs market, an economy that is not growing, and $7.4 trillion in all-time highs sitting on the market. Now, the consumer remains cautious and price conscientious due to ongoing concerns about high prices. Though financial well-being has shown some stability, there's all of this going on. And then, in literally 8 days, we've got the Fed essentially almost guaranteed to cut interest rates. 93.8% they're going to cut interest rates here. And then on top of that, we're going to start to see this potential of 50 basis point rate cut. I think we're going to start to see that go up because even though we have the Dixie climbing up oh so slowly at 97.7. We have the S&P 500 that hit an all-time high literally today. The all-time high prior to this was 65.22, and we had it cross the all-time high literally today. With this market that I'm lining out to you guys. So isn't that incredible that we've got the market signaling that everything is all okay? And we've got the GOAT alt-nighter hider saying the Fed has de jure and de facto purposes. Amen to that. So make sure you guys are smoking that like and hitting that subscribe button for your boy over here as I'm covering all of this. And in 8 days, like I said, we expect the Fed to cut by 25 basis points at the very least. If not, they may cut by 50 basis points. It seems like the market is signaling that we are going to cut by 25, but the market's been wrong before, right? The 93% is a market expectation for sure. But these market expectations, man, I mean, if it doesn't come true, I mean, at this point, we just see so many negative signals in the overall market. It's hard to believe that, anything can really change that. Now, like I've been following so closely on this channel, you guys know as subscribers, if you're not subscribed, please subscribe, that the jobs market data has just keeps coming out and it's negative, and that's laying over into the housing market. And, the inflation that we're seeing here is just oh so massive. I mean, shout out to the Kobayashi letter on X, because like I use them a bunch to do a lot of this research here before. As you guys can tell, they've got some great threads. But the concentration that we're seeing and the overall just like massive amounts of potential rate cuts is just absolutely insane. So the US BLS has overstated nearly 80,000 jobs per month. Look, I don't know about you guys, but 80,000, I mean, it sounds like a lot, but to put that in perspective, that fills up like 95% of NFL stadiums around the globe right now, or around the US. So the Fed is essentially going to cut interest rates because this is what the market is expecting. That's what all-nighter hider is saying too. And I mean, I agree with you. It's like if they don't cut interest rates, the entire market is going to collapse. But I anticipate they will. And, we're going to have to buckle up for some more potential that we've got here. So make sure you guys are smoking that like Cheech and Chong and hitting that subscribe button for me. Help me get to 500 before the end of the month. We're about 150-ish away. Tell a friend to tell a friend, and I'll catch you guys all tomorrow.